Well, hey guys, welcome to the channel. I'm Sheen, your host. This is Money Matters. In this channel, we talk about money, finance, how to grow your money, how to invest your money, how to make money work hard for you. It's been a minute since I put out a video. I was on vacation with my family. We went to the Texas Hill Country, stayed in a cabin along the river. It was beautiful. Went to some beautiful parks. But I did a couple of live streams while I was on vacation. But I'm back in the studio now, ready to get down to business. If you guys enjoy my videos, consider subscribing. Give me a thumbs up. Really helps out the channel. If you want free stocks, free money, check out my links in the description below. Sign up for Webull. They are giving away 2 free stocks. They brought back the 2 free stocks. So sign up with my link. You'll get 2 free stocks. My links for Robinhood, you also get free stocks. Bunch of links down there. Check it out. You get free stocks, free money, whatnot. Check it out for yourself. Also, it supports the channel. So today we're going to talk about IPOB. It is Chamath Palihapitiya's company. It's the company that's going to merge with Opendoor. But Chamath Palihapitiya is the CEO of IPOB. He's doing all the IPOs, IPOB to IPOC, to IPOZ. He just released one, was IPOC with Clover Health. I haven't talked about that one yet, but I may in the future. But this one is IPOB Opendoor, has been getting some decent traction. And I just put out a video about 3 weeks ago. My first video about IPOB, when this news was first came out, has 5.3 thousand views. And in that video, I talked about briefly why I'm pretty bullish about the whole concept, about the whole real estate market, etc., etc. So check out that video if you haven't yet. But in this video, I'm going to go over the investor presentation, point out some very key aspects, some of their numbers, etc. So make sure you watch to the end. I'll show you my cost basis, how much I am investing into this company so far, and I've been continuously adding to this position since my first video 3 weeks ago. So make sure you stay till the end if you want to see that. But let's get started. So IPOB Opendoor, what is this company? So basically, they are offering simplicity and convenience. Simplicity and convenience to buying and selling a home. I mean, after all, everything now is the internet age. You could do everything on the internet. With the whole illness situation, it has just opened doors. Get it? Open doors for a lot of new things, and so real estate is just another one of them. I mean, we've been ordering our groceries online, having it delivered to our house, ordering food takeout, having it delivered to your house. You hail a cab with Uber on your app. You could do sports betting online, do casino betting online. Why can you not buy and sell your home through your app on your phone? It just doesn't make sense. So with millennials nowadays, with the whole new generation, it's just the way it's going to be. You cannot fight the trend. So IPOB Opendoor is going to bring that into the next generation. Buying and selling your home straight from an app. Literally, you could sell your home within a few days and look for another home within a few days. You could look at the inventory, go to the houses yourself. You don't need a realtor. You get a code right on your app. You open the door and go in, check out the house for yourself. So it's all done remotely through the app, and that's just the way things are trending. So simplicity and convenience, through the app, through their web services. You could get all online cash offers, flexible closing dates, digital closing. Everything is done through the app. And so, like I said, you open the app, you could search for homes in your area. You could get all the financing in the app, and you could get all the offers through the app. Everything is done through this app. So let's look at the leadership team. One thing I need to point out is this leadership team is ripe for Wall Street. These are not your startup folks. These are folks that have been in major companies and major corporations that are really in tight with Wall Street investors. Netflix, Square, Airbnb, TPG, Trulia. Eric Wu is the CEO, and he was head of product at Trulia. So this Wall Street loves this type of company, these type of folks. So this is really geared for the Wall Street investors. And if little folks like you and me, the retail investor, can get in early, and that's the special thing about SPACs. You could get in very early. It's not like a traditional IPO where Wall Street folks just fight over it, and the price goes skyrocketing before the retail investors ever get a chance to get in. This is what's so special about SPACs. You could get in at the ground level. You could get in at the same levels as these big time investors are getting in. So 21 markets today, 21 markets, roughly only 2% market share, and the run rate is $5 billion as of Q1 of 2020. Their playbook leads them into a $50 billion in revenue, up to 4% of the market. and 100 and gaining into 100 markets, $50 billion revenue again. So they are the market leader just in 21 markets currently. Their revenue went from 0.7 billion to 4.7 billion from 2017 to 2019. They had $10 billion in homes sold, over 80,000 homeowners served. So look at their competitors. They are roughly 4x their next competitor at 18,799 homes sold in 2019. So basically, the whole complex process of selling a home. I mean, if you sold a home or bought a home, you know this complex, this whole routine. Basically, you need to find an agent, you need to do some repairs, prepare the house, new paint, etc., etc. You list the home for sale. You have to do open houses. So if you're living in the home, that's a huge hassle, especially with the whole illness situation. Now you don't want to have a bunch of strangers coming in and out of your homes. But typically you have at least 5 to 10, maybe 15 people coming through your home, viewing the house. So you have to schedule that. So it's a real process. Then you get an offer. There's a back and forth inspection, negotiation, etc., etc. You get the point. Selling a house is not easy. Selling a house is not how it should be, how you order something from an app. So this is what Opendoor is aiming to do. So I mean, just to cut to the chase, Opendoor, basically they're a home flipper. Basically they buy your home for a negotiated price. You're probably not going to get top dollar for it. I mean, if you sell it yourself and you want to go through the hassle and you want to do all the home showings, get an agent, etc., etc., you might get a little bit more. I mean, that's just the way things are. But if you're in a rush to get out of your house, if you have a job somewhere, this is definitely the thing that people are interested in, getting out of your house as soon as possible, so you could get into your new house as soon as possible, and you could have your home sold within 3 days. With Opendoor, they will basically give you an all cash offer for your house, and they will take your house and they will do all the repairs, all the painting, etc. Basically fix up your home and get it ready for the next owner. They will have showings. They will have your home listed on their platform, and other people that want to buy your home, they could come in, unlock it through the app, and they will be able to view your home. And by that time, you will be gone. You'll be in your brand new home in your new city. So it's that easy. They will buy your home from you, all cash offer, and then you could take your cash and do whatever you need to do with it. And then they're going to turn around and flip your home. Of course, they're going to sell it for more than they bought it from you, but they're also going to put more work into it, fix it up, etc. But that the profit in that is not that big, because when you flip a home, the profit isn't that big, especially when you're flipping, a median level home, 200, 300, 400,000 home. The flipping is not that profitable. That's different from flipping a house when people buy, $80,000 houses, $60,000 houses, fix it up and flip it for like 120. So that is where home flippers make money. But in this market where Opendoor operates, they're buying homes in $200,000, $300,000 homes. Flipping it, you don't get a lot of profit. So where does Opendoor, where are they expecting to make profit? And here it is. So they are expecting to flip homes, but offer additional services that they can upsell to the new owner. So they can offer title and escrow, financing, insurance, warranty, home upgrades, home maintenance, moving services. So basically they want to be a one-stop shop for the next owner of your home that you sell. So they buy it from you, give you all cash offer, and then they turn it around, flip it. But when they flip it, they make a little bit of profit on the flip, but they upsell on the new customers, basically offer them everything. So they could be a one-stop shop, get the new homeowners into your house, and basically free of headaches, get in your house, take care of all the maintenance issues, take care of all the warranty issues, all the title, all the escrow, everything all in one single app. All right, so in this next slide, they are demonstrating how their high margin services is working. So as a proof of concept, they have already offered title and escrow. And you see from this graph from Q1 to Q9, so 9 quarters, you see the attachment rate from 5.7% when they first launched title and escrow up to roughly 83% in Q9. So that means nearly 83% of people that buy a home using Opendoor, they do opt for Opendoor's title and escrow services. And they just recently launched home loans, buy with Opendoor, list with Opendoor, and for each one of those services, they're getting about $5,000 for home loans, $5,000 for $5,000 with buy with Opendoor, $3,700 with list with Opendoor. and they're going to be launching home warranty, upgrade, remodeling, home insurance, etc. And they're expecting to get about $7,500 per home with these additional services. So if you add that all up, the home warranty, the home loans, title escrow, if somebody signs up for all of the services that Opendoor offers to the new homeowner, that is more than $20,000 of additional revenue per home that they sell. All right, this next slide shows you their growth from 2017 to Q1 of 2020. They had a compound annual growth rate of 145%, so really, really massive growth. 3,100 homes sold in 2017, up to 19,000 homes sold in Q1 of 2020. Revenue grew from 0.7 billion to 5 billion in Q1 of 2020, a CAGR of 159%. So you see their profit margin, they're still losing money, but you see they're losing less money every year from 2017 to Q1 of 2020. Only 2.3% loss in Q1 of 2020. All right, so let's look at their financials. So just really massive growth from 2017, compound annual growth rate for homes sold, 113%, 2018, 139%, 2019, 152%, and then you see 2020, because of the whole illness situation, they were down negative 49%, but they expect back growth in 2021 with 39% and 2022 with 79%. And on the second line for the revenue, it pretty much reflects the same in 2020, negative 48% because of the whole illness situation, but back to growth on the revenue up to 79% in 2022. And in 2023, they are expecting to be profitable, just a tiny profit, $9 million in 2023. All right, so probably the most important slide of this whole presentation is this right here. This is their transaction overview. The IPOB, the initial price was $10. So if you were getting into this at $10, you're pretty much sitting very, very pretty. Got a great price for IPOB for Opendoor. But now the price is up to $21. So at the $10 share price, you are getting an enterprise value about $4.7 billion. That is 1x their revenue of 2019. But now we need to calculate what the enterprise value is today. So if you are buying in today, freshly buying in today, what is the enterprise value that you're going to be paying for this company? So basically it's $21.24 at the close on Friday. So basically you just replace the $10 with $21.24. So $21.24 you multiply by the outstanding shares, which is 630, and then you subtract the cash on the balance sheet. So the final enterprise value at $21.24 is $11.8 billion. So this company is now valued at $11.8 billion at this share price. So before you were getting 1x the 2019 revenues, but now it is 2.5x the 2019 revenues. So then the big question is it too expensive now? Is it still worth the price to get into? And no one can really answer that for you except for yourself. I am just here to present you with some numbers. So we're going to do that. We're going to compare it to probably the two biggest players in the space, Zillow and Redfin. But before we do that, just a vote of confidence. ARK Invest, Kathy Woods over there at ARK Invest has been buying into IPOB. They have continuously to buy since the past 3 weeks when this first became public. So they are now up to 1.5 million shares at just over $33 billion invested so far. All right, so currently, like I said, IPOB Opendoor has a enterprise value of just over $11 billion. Let's compare this probably to the biggest name in this space. It would be Zillow. So Zillow has a market cap of $23 billion. So with a market cap of $23 billion, they must be massive. They must be doing a lot more revenue. But let's take a look. No, in 2019, they only did $2.7 billion in revenue. Keep in mind, like I said, IPOB Opendoor did $4.7 billion in revenue in 2019. How about Redfin? Total revenue of Redfin is not even $1 billion, $779 million for Redfin. And market cap for Redfin is $5.4 billion. So the market cap for Redfin is smaller, but again, they're also doing a lot smaller in revenue. So guys, there you go. Those are the numbers. You have to make your own decision if Opendoor is a good buy at this current valuation. For me, it is, but that's just my personal opinion. Here is my portfolio. This is what I've been doing. I now have 90 shares at an average cost basis of $13.84, and I am up roughly 53% on this position. So guys, that's my video. That's my numbers. That's my overview. That's That's my thoughts. Let me know if you like my video. Give me a thumbs up. Really helps out the channel. Consider subscribing if you haven't yet already. Really helps out. Appreciate each and every one of you that watch my video, watch my content. Trying to grow to 7,000 subscribers. So thank you guys so much for watching my videos. Again, consider a membership to my channel. It also supports me. I think it's $2 a month. So that supports my channel. Also, if you want to support me over there on Patreon, I think the lowest tier is $3 a month. So that really helps out the channel. Thank you guys so much. Have an awesome week. We'll see what the market has to offer next week. So I hope you guys do well, make some money, and I'll catch you in the next one. Peace.